Hey everyone, welcome to this week's episode of The Lumber Word. The Lumber Word is the best streaming podcast in the lumber industry.
Number one.
So we have been told. Number one. Uh,
Number one.
Episode 168, recording it on the 13th of May, 2026. We got a great guest today, Mike Wisniewski. And I know how to pronounce that name because I've been around Mike for a long time. And Mike is with Westline Capital Management. Is that right, Mike? Westline Capital Management, or do you just call it Westline Capital?
Capital Strategies. Westline Capital Strategies.
Westline Capital Strategies. Right on. Tell us a little bit about Westline Capital Strategies.
Westline Capital Strategies is a full-service lumber futures brokerage and other commodity brokerage and risk management consultancy. So when I say full service, we do deep dive into your business, figure out where your risk is, and figure out strategies to either mitigate or look for risk that you want. We do a lot of things that you guys talk about here on the show because the three of you are all masters of risk management as well. But if you want to open up a futures trading account, you can give us a call and we can help you out with that.
All right, cool. We'll jump in a few minutes, Mike. We'll talk a little bit about your hedging seminar you got coming up in Pine.
That'd be great. Yeah.
And we'll go through let's go through the roundtable first. I'll sum up the week by saying when I read social media and see a bunch of stuff out there, then talk to customers that are buying and mills that are selling, I see a tale of two worlds. My buddy Casey said that there was some trepidation in buying today. He used that word trepidation, where certain people are trying to build an amount of inventory. And if you look at some of the days of inventory at some of the yards, in my opinion, they're about as thin as you can run them. And if everybody wanted to buy more inventory, I don't know how much there is where it wouldn't move the needle a little bit on pricing. As much as the markets like to climb the wall of worry, as negative as I hear things about housing, I look at multifamily last week, I look at our shipping, I look at how good the business is. And, there's a big positive when everybody's negative out there on lumber, because that means the price probably isn't going down. When we look at the spruce world that we've dealt in, pricing, there were some discounts last week. There were some discounts this week if you're willing to buy volume. Some items are easier to buy if you're looking at some 2x4 9s. If you're looking at 2x6 9s, those are a lot harder to buy. 2x4 was all over. You got May going into expiration, and people were able to buy cars at a significant discount to the board. Talking to a guy today on the East Coast, he was starting to buy some U.S. species cars of studs are starting to slip out over into the East Coast, which is smart because I think mills are making stuff move and getting the best return they can wherever they want to go. But one thing I heard Greg say to somebody on the phone today, and I hear him, everybody's calling, checking on trucks where they're at, trucks that they just bought from us last week. And as long as that, Greg, I'm stealing your thunder here. As long as that's going on, price is probably not going down for a bit on many items. Charles isn't here this week, so Pine, it continues to kind of sell off a little bit as we see, but we don't have anybody to really speak to that today. Matt, what are you seeing in your world on items?
I think I'm busier than the room. So I mean, the 2x4 2 and better spruce or hem fir, Doug fir dry kind of has a floor on it based on what I'm selling number 3 for. And I'm selling volume in number 3. I'm not just selling a truck here, truck there. I've sold multiple cars this week, multiple trucks. I'm kind of getting run over still. And I don't have a lot left, right? So it's, it's that if the May futures contract went to 570 to 560, or if cash went to 570 to 560, that translates to what I'm selling number 3 for in Texas. So there isn't much downside to 2x4 if you just use that math. But I mean, I'm an anomaly. I'm really busy, and the floor is not really busy. We're at about a 6 or a 7 on a scale of 1 to 10. You know, we're doing fine. We're maintaining order file. We're not building order file. We did solve a couple problems this week. Last week, I said that I thought that the two things that were most suspect in Western lumber were 9-foot 2x4 and 2x12 anything. And we have found lots of liquidity on 9-footers this week. We sold just a massive chunk of them yesterday. 2 weeks worth of production gone instantly in
Is that,
like
that
two phone
Hemfer?
calls.
Is that Hemfer or Doug fir, Matt?
It was all three species: Hemfer, Doug fir, ESLP, mostly Doug fir.
And like what's the market price on
600 to 620 Texas or Midwest. You know, it's like it's more expensive than I think what you could get Eastern spruce for, and especially if you're going to like Philadelphia or Boston or something like that. But if you're going down to Birmingham, or if you're going to, you know, Arkansas or Texas or Arizona, yeah, the Western species are going to get those orders, and that's what happened yesterday. So that was good. That was actually a little bit of a surprise, to the point where the people that actually trade studs for a living here at Hampton and the mill guys all feel like the bottom's been established now, you know, and if you'd asked that question on Monday morning, they would have been, oh, I don't know. So there's some certainty that's been created there. And then on the 2x12, we found trading levels that are like $20 to $30 off of whatever the high of the last 6 weeks is. But that's also moving steadily out the door. And so, I mean, it really, other than the fact that nobody wants to speculate right now, we're maintaining order files. We have lean inventories in the field, and we're still getting lots of batters opportunities at the plate here on Western everything, green and dry. And now the only thing that I think we would actually care to talk about would be like green Doug fir long lengths 2x6. That's it. One item. And everything else is tidy and steady and at least firm, you know, and not going up but not going down, for sure not going down.
Greg, what's your thought on the market after going through last week and this week? I know, you know, I mean, full disclosure, we were running our inventory down for a while, and we've probably bought more than we've sold in the last 2 weeks. Would that be about safe to say, Greg?
Sorry. Yeah, a little bit more. I mean, marginally more. I mean, I guess the most interesting thing, one of the things, when I also looked at things, was that, you know, we'd caught up on shipping over the last 2 to 3 weeks, and, you know, and in substantially better shape. They were still paying more money, but everything's moving. So two things, I guess. One is that, you know, we're in a period of seasonal weakness right now. You know, if you make a seasonal high somewhere between mid-late February and early April, you know, second quarter typically has some seasonal weakness. And what I see is that we're moving basically sideways. You know, yeah, there's some items that are lower. There's some items that are a little bit better. We're basically moving sideways. Over the next 2 to 3 weeks, 4 weeks, we move from seasonal weakness to seasonal strength. And, you know, if you're in a bull market, that's what happens. During seasonal weakness, you trade sideways, and during seasonal strength, you shoot up. So you look at some of those higher momentum items that we're talking about that are tight already: 92 and 5/8, 2x6, 104 and 5/8, 2x4, 2x6, 10-foot trims. Those items have a lot of potential upside, very little potential downside. I mean, yeah, the things that have been trading off a little bit, 2x4 16s, 2x4 9s, you know, they get a footing, and, you know, they'll be $40 to $50 higher before you know it. I've been calling for the high in lumber prices in July, August. I feel like I'm out on a limb. I feel I don't have a, you know, I kind of feel like, you know, like Trump in, you know, over in the Strait, you know, trying to do it all by myself. Nobody's with me on this. And I'm uncomfortable with it. I'm very uncomfortable with it. And why am I uncomfortable with it, Mike? Because there's no easy outlet. When I look, I go, how excited am I of selling July at 590?
Yeah.
Where's my excitement there? You know, there's Matt telling me, hey, the floor on 4-inch number 3 is $10 below May. So like,
Yeah.
oh, that's right. One more thing. Every Canadian mill is still losing all sorts of money.
Yeah.
How
Hey,
long can you keep losing money for? How long?
Can you tell us, like we're third graders, about this seasonal weakness / seasonal strength time frame? Like how long that new seasonal strength comes in, and for what period of time do you expect it to, you know, in a typical year?
Yeah, and I mean, I guess, I mean, you know, so you know, I start with production. Q1 is the lowest production quarter of the year. Q4 is the highest production quarter of the year. Markets typically make a high in, you know, in Q1, and they make a low in Q4. You mix on that, the highest production quarter of the year typically is Q2, right? I mean, I'd say that the second highest production quarter of the year is typically Q2. Why is that? They've done all the winter logging. Weather starts to get better. They are able to produce, you know, you're able to make a lot more lumber when it's, you know, 55 or 60 degrees than when it's minus 50 or 60, right?
Yeah.
So, you know, and these are like, they're wide ranges in terms of when these are, and there's lots of overlying factors that supersede it sometimes. But you know, why do we have seasonal strength going in summer? Well, typically you have summer shutdowns in June and July. You know, that's a time. Well, you have summer shutdowns. You have curtailments due to fire season, right? I mean, so that's, and it's really, you know, I'm talking spruce in particular.
Yeah.
And this year, I'm anticipating maybe a little bit more curtailment in July because their CBD AD is going down in August or September. I don't think we have the date yet on it, but you know, you're going to get 10% kickback if you sell less lumber in June and July and wait until you get that lower AD CBD. Does that make any sense, Matt?
Yeah. I never really think about summer strength, you know.
That's because you sell in Texas, and those are the slowest months of the year down there.
Well,
You know, we're up here in the Great White North, and you know what? You know, it's still 50 degrees here.
I mean, honestly, I usually do okay in June. July and August are always kind of a coin flip. You just never know what you're going to get. And usually September things start to sort of settle out again, and then you get into a speculation time period where we all know that the big chart shows seasonal weakness in the fourth quarter, and so we're going to be, you know, sitting on our hands waiting to invest on some stuff in October, November, December, which is exactly what happened last year, right? And we all did that. But I mean, I've never really thought about summer seasonal strength before. It's interesting that you brought that up. The first time I've actually had to think about it that way, and it actually makes sense because I do have a lot of carryover business typically in a year, both in Colorado and Texas, and New Mexico, markets that I've sold for 30 years in June. Like there's usually a lot of outflow of material, even during like the COVID era when we were coming off of, you know, $1,700 highs. And I sold a mountain of lumber in June. And I never really think about it that way. I always plan to run my inventory down by June because I don't know, it's like a creature of habit. But it's a good observation on your part. What, Mike, we brought you on. We want to hear you talk, buddy. What do you have to say about all this?
Well, I'm waiting for my my spot to get in with Greg on his rant there. But
that you have, dude, come on. You have not been listening to the podcast. That is not a rant.
Oh,
if I get on a rant, you'll know it.
Can I just first say I'm impressed with Matt, like the way this is. I'm gonna sit back and chill. You guys are really doing a good job here. Like I'm like, this is good.
But apparently, you're doing a good job too, Ashley.
No,
well, I'm in agreement with Greg about just kind of the state
You're
of the
coming.
market.
You're gonna come to my aid in the straight. I love it.
I'm going to come to your aid in the straight, which is part of the equation here. So you back up 12 months or 18 months, and there was just optimism in the market. And you saw it reflected in the futures markets where there were back months that were running a premium. And it was an excellent opportunity for inventorying entities like yourselves where you could put wood on the ground and get a basis out of it. So you fast forward to today, there's very little premium into the back months. So, what is that? What does that mean? I think the optimism is out of the market from the buy side. And I also think the sell side now can go into the boardroom with all the information they need to say, look, we shouldn't be making more wood right now. It doesn't look good out there. So I just think there's this pessimism in the market, and it's kind of rightfully so. You look at today, we had the producer price index blow out to the top, much higher pricing. It's very easy to explain through the war and energy prices. But the fact is there's inflation and the bond markets are pricing in a rate hike. So that doesn't help demand any. I know a wise man once said the number one driver in lumber demand is interest rates. Who said that? Greg Ryan.
Would that be Greg or Ted?
Well, probably. I know. So,
well, and I've modified it since then and said that there's three drivers. There's interest rates, there's the price of homes, and then there's incomes, right? And you kind of actually need. It's all three of those are a factor. And it's one of the things why we've seen is one of the things about this year is so far, the big increase. We get a fresh housing start report coming up, but the big increase in multifamily construction. You see it. We see it here in the Chicagoland area. I mean, everywhere you go, there's multifamily construction going on. Ash, you were just out. You just drove out to Iowa, didn't you? And what'd you see out there?
Oh, well, pretty close. It was Aurora, Illinois.
Oh yeah. Oh, okay. Yeah.
but no, I drove there 2 years ago. Same place, same restaurant, and I was driving through farm fields. Now every farm field has a multifamily dwelling being built, or a I don't know what the multifamily people, they have a name for it. Something 5 podium, where they've got you remember the place like I lived in Houston, Matt? They call it a podium type of multifamily building where you got the parking in the middle. Then you got all kinds of
you still owe me money for that parking ticket, you bastard.
Yeah, that was
$280 plus another $400 from the local mafia owned tow yard
company. That was great. But
I think that turned into a business expense.
I'm seeing that stuff pop up everywhere, and to Mike's, like, I see people on all the social media saying don't buy homes right now because they're going down in price. And from my 58 years on this earth, that has never been, in my opinion, good advice to try to time when you're not going to buy a house if you want to buy a house.
Isn't that the better? Isn't it better to buy it when it's like going down in price than when it's going up? I mean, it's like you have more leverage now, right?
You're talking to a guy that bought one in 2004, right at the top of the market, right? And
no, the top was January 2005. You missed the top.
That's pretty close.
I bought a house in April of 2005, so I was close.
But with all that said, I think back to the climbing the wall world. Like, so how are we still building 1.5 houses if things suck so bad?
We're not. We're building 1.35
or 1.35. I mean, how are we still building that many houses if things suck that bad? And we're probably underbuilt right now.
Well, I mean, we're definitely underbuilt, and I mean,
it's because the boomers don't want to sell their houses.
This is a floor level. I mean, there's be hard for starts to fall off significantly from here without, you know, a major economic depression.
Yeah,
There's
that's
also
true.
a lot of mobility in this country lately. You know, I mean, if you think about the migration patterns of the United States over the last 10, 15 years, there's a lot of people moving out of colder states to warmer states as they get older. They don't want to live in North Dakota anymore. They move to Phoenix. There's people that are leaving California, going to Texas because they don't have state income tax. I mean, there's all kinds of drivers to this, but you can look, and I'm not making this up. I mean, there's lots of different studies that's been done on this about the migration patterns of the United States. Basically, it's from the northern tier states to the southern tier states. Now, there has been some backfill into the Midwest here over the last few years because the housing costs are cheaper there. So if you're a young person, you want to get your life started off, you know, at a reasonable entry point, you move to Indianapolis. You know, you don't move to Chicago, you move to the outskirts, maybe, you know, 100 miles away or 60 miles away. Portland, you don't live in Portland, you live in Wilsonville, you live in, you know, McMinnville. You're just going to be further out, but you can find a house that doesn't cost $500,000 to start. And so, you know, we're definitely, not only are we bringing lots of people into the United States over the last few years, you know, we brought in a bunch of people from immigration, but you know, you have natural growth of the population too. And really since 2008, we haven't kept up on a long-term scale. We have not kept up with like the 1.5 million kind of baseline housing starts over a 50-year time period average. We've been below that for 15 years, no, 18 years now. So you know that there's demand out there. And I don't see, like Greg said, I totally agree. I mean, how do you go much below 1.3 without some major kind of economic shock?
And Matt, there's the hidden demand in that the housing stock has never been older. So, you know, my sister actually just bought a house and it hadn't been updated since probably 1975. And they're doing a gut rehab, putting all new walls and everything in there. So there's that, I don't say the DIY, but the repair and remodel for sure. Like your house at 60 years old is not what you need for a house in, you know, 2026.
Right. Yeah.
Hey, Mike, one thing interesting. Mike and I were talking about before the show today. He brought it up and he had a chart, the volatility chart, Mike, and it's interesting to take a look at. We'll see if we could pull it up here.
Yep. Just share my screen.
Well, I mean, that's one of the things that you know, I wanted to talk about was if I look at front month futures, the weekly chart, other than a couple of stray days where we spiked down to, you know, the low 570s or spiked to like the high 60s, we've been trading between 570 and 600 for 15 weeks. Think about that. Almost 4 months, right?
Yeah. So, well, here's what you're talking about.
If you pull up the weekly chart, right? Is this the weekly?
This is daily nearby. So front month daily.
Oh, okay. Yeah. There, you highlight it right there.
The line on the top is the daily price. And then down at the bottom here is the 14-day historical volatility. So I trade a lot of options. And in my world, if the volatility is trading at 20%, which is represented by 20 right here, I'd like to be an option buyer. If it's trading 30%, I'd like to be an option seller. Which, you know, historically has worked pretty good. But this last probably, well, 2 time periods here, you can see in 2023 to 24, we ran pretty low volatility. And then we're angling down on volatility again. So I think the easiest way to think about volatility is if you took this line chart and think it was a piece of string and you just stretched it out flat, how long would that string be? So a volatile market is one that moves back and forth and across a distance. So you can see here, we were pretty volatile. And then all of a sudden it starts falling off. because you're not going anywhere. You got these little baby little wiggles.
But look at the big breakout that comes out. That's the question I have for you.
Wow.
When you go, and I asked this of my futures broker yesterday, I said, hey, when we go for long periods of time with really basically flat numbers, what's more likely, a breakout to the upside or a breakout to the downside? And he claimed, and I have no reason to doubt him, you typically get a breakout to the upside after a long period of shallowing.
Yes. And actually, that's what I was going to point out next. Thanks for bringing it up, Matt. You look at the move from low volatility to high volatility is not smooth. It happens like overnight. So, we're here on right before Christmas of this year at like a 10% volatility. And all of a sudden, after Christmas, we jumped to 30 and stayed there for a couple weeks. And then, recently the same thing happened at the end of February. We had a big vol jump and then came back. But even look here, this one, here was a breakout to the downside for vol. The biggest point,
but I mean, I think like if we're looking at 15 weeks and like in a tight range, we look at that and I mean, so quote unquote, is this market really saying, hey, we're in equilibrium right now and we're waiting for something to push us, because we're back to an object at motion tends to stay in motion, an object at rest tends to stay at rest. You know about that, right, Matt?
Yes, sir.
There you go. Newton's law.
Yeah.
Uh-huh. Yeah.
So what changes supply or demand?
Newt.
I think
your buddy Newt.
We're really saying.
Are you that old, Greg?
What's gonna be the catalyst that's gonna start things going? And Mike's point is right. When it happens, it's gonna happen fast. You're not gonna be able to hop on the bandwagon. So, my recommendation, since I'm gonna talk the talk, walk the walk. My recommendation is, hey, if you are a big pro buyer and you're saying, oh, I'm staying in my lane, I'm keeping at 45 to 50 days of inventory. Hey, now is the time to look for opportunities to push yourself to 60, 70 days. Hey, you go to 90 days worth of inventory now. What is that? Let's see. That's June, July, August. You're mid-August. I mean, that's the play is to build that inventory. If you're a multifamily and you have a project right now, the premiums for third and fourth quarter are as relatively low as you're going to get. Right.
Well,
I mean,
think about
yes,
it. You
there's
look
some
at July.
items.
July's trading at the cash market. So you'd actually have to be kind of crazy to go buy cash today.
Right. I mean, the modest challenge on that is that's great for 4-inch but 4-inch is undervalued to everything else, right? Everything for the most part, everything else is trading strong to 4-inch.
Saying that's a 1-for-1 trade.
I mean, but if you need 4-inch spruce, and
it's a great trade.
What's pine? What's 4-inch pine right now? Hang on.
4 something, right?
440. East side's 440.
July pine 460. Yeah, I mean, I don't know. We don't have a pine guy on right now, and I read where some of the big discounts. I mean, obviously, like the pine's down 100 and what do we say, Matt? 125, 150
yeah.
from high trade.
Yeah.
So, you're not as low as you were in the fourth quarter, but boy, you're getting down. Whereas 6-8 weeks ago, pine was trading at a premium to the spruce. Now it's trading at a discount up into the northern markets.
Well, last week I got the impression is after you left, because you had stuff to attend to, Charles was talking about the 2x4 pine price, and you could tell he was liking the buying opportunity. Like he had identified that. And I just make a simple observation. I mean, what's the cheapest species in North America? Well, right now it's pine. And so, yeah, reincarnated. I'm coming back as a pine trader. If I was a pine guy, I'd be looking at 2x4 really slobbering over it. And especially when you compare it to what I'm selling number 3 for.
But-
it's just ridiculous.
Matt,
and the volume of business for number 3,
right? Because you're
is still good.
Number 2 Pine's delivering significant discount to number 3 Spruce right now.
Yeah, I mean,
all
number
across the
2
South.
Spruce is like 100 plus higher on a delivered basis to the south.
Interesting thing on number 2 Pine, if you look at all the regions, 2x4 14s in some regions are a premium, and they're almost the same price as 16s on Southern Yellow Pine right now. Number 2,
but
and
not in Spruce
and number 1. No, but in Pine, right?
Right.
Which is interesting.
Hey, Ash, I want to point something else out on this chart, and
Sure.
Matt kind of alluded to it before, that the market tends to break out to the upside after periods of calm. And, you look at this chart and you can go back basically right here till the beginning of last year of 2025. Our floor is 560. Now, since that time, inflation has increased. Costs at the mills have increased. So this is delivered Chicago pricing.
Well, the tariff and all that is
I
increased.
mean, the tariff's double what it was back then.
Yeah, you back in to the mill. Like I find it hard to believe we go below this 550 level from the point that the mills are getting killed at that level. So what right now there's low volatility. Nobody's feels any pressure to do anything. Yet maybe this is the opportunity to do something like Greg just said. You can buy wood today and hold it, or you buy July futures.
I don't think people are going to do it though, Mike. They've shown remarkable strategy and resilience in keeping their inventories manageable and low and moderate, whatever you want to call it. But every time I travel, I see it with my eyes.
Well,
and I don't see them, for 2 reasons. One, I don't think that the bosses want to spend the money on the inventory and carry. And the other reason is I think a chunk of business out there is still uncovered from the first quarter and what they owe people in the second quarter, and it's not profitable. And so those 2 things combined tell me that the customers probably aren't going to change their behavior unless they're absolutely forced to. Now, usually when they're absolutely forced to is after the things rallied $100, right? That's when you get your panic buys, and then the giant, massive, like I've talked about this, that if I have a day where I come in and I just sell everything, the blow off top, we call it. Well, then I just want to keep selling and maybe even go short from that point forward, because once that's over, it's over, right? But they're nowhere near that right now. Nobody's buying lots of extra wood from me. Nobody. And nobody's buying extra wood. That's why they're tracing you, Papa G, on all your trucks.
Well, what would the market do to hurt the most amount of people right now?
Go up 100.
Yeah.
Yeah.
And the funny thing is that would actually hurt the mills some as well, because if it's up 100, they would want to sell more, but they're not prepared to, I would guess.
Well, they're currently planning extended summer shutdowns in the the Canadian provinces, because of if they push back production to later in the summer, then it's going to be cheaper for them. They're going to pick up 10 or 12%.
Yeah. So I think we could be kind of on a tinderbox, but if the economy doesn't really pick up, affordability doesn't pick up, demand doesn't pick up. So it's kind of a quandary right here.
Yeah, I mean, I think you need to make the assumption that demand is what it is, and don't bank on better demand. The price appreciation is going to be driven by the supply side, by all the things that we've mentioned. You would need the substantive changes to have any appreciable increase in demand, and but I mean, what we've shown is that demand at this level is just fine, right? I mean, there's nothing wrong with it.
One thing I'm noticing too is home builders are finding a way to sell all of their homes, whether it with discounts, buy downs, and interest rates. And the doomers out there that are mad that boomers aren't selling their houses and screaming on the top of a box about how houses are going to drop 50% because of boomers isn't going to happen. And
I mean, I'm just going to make a straight comment. You spend way too much time on social media, Ash. That's a dark, that's a black hole that you don't want to go down. It's a black hole.
Yeah, but it's also why I'm so good at what I do.
This is
Because I
yeah,
get
maybe
I get
maybe
information
you're
faster
right.
faster
Maybe
than
you're
faster than anybody else.
Hey, speaking of information, Ash.
But you're right. But you got to get. But you got. Hey, look at. You got to stay away from the what do they call that? The doom scrolling or the
yeah. Well, I'm just saying, there's so much
100%,
there's so much
100%,
negativity on it.
Yeah, I've learned to weed out the doom scrolling.
So, you know, what's funny about this conversation is Greg's making a comment on social media about social media. I think it's so funny when podcasters like poo-poo social media, yet there it is. And I have a big kudos to you guys coming. So my partner, Greg Kuda, and I just did a week-long trip through Europe. And do you want to know one of their main sources for information about what's happening in the U.S. market? Lumberword.
Lumberword.
I'm not kidding you.
What?
Everyone we talk to over there listens to the show.
No way.
Swear to God.
I better be careful.
But
no, and listen, we appreciate we appreciate support no matter where it comes from. That's for sure.
I definitely know that the mill owners and managers, a lot of them listen to this show because they get unfiltered information that they might not get from their sales guy.
We give away too much information. Funny, last week I was kind of bowled up on the call, and like later on that day, or maybe it was the next morning, I got a call from a mill that I hadn't done anything with in a while, and he figured he'd take advantage of me, and I did buy cars from him. So
good job.
So I just want to know for all you listeners, is like, if you call us, we'll support you.
Yes. So I do have a little nugget of information from this Europe trip, which was really pretty interesting. So at Westline, we have clients. We say we go from the stump to the mortgage because we've got, producer clients all the way through developer clients. And I think that
stump to dump,
stump from the stump to the bump. So I think the traders in the middle sometimes forget about how big the supply chain is and how much you can actually learn from that. On this trip into Europe, one of the things we learned was the mills in Europe have a problem with the US market or the North American market. Everywhere else in the world, they get quarterly pricing. What they don't get is a quarterly price generally from the US. So it's hard for them to build out their business models for this. And those mills are set up so well and uniquely that they can produce any item at any time for any market. And in fact, this blew me away. Never thought about it. They can produce items for two different markets out of the same log at the same time. So they were talking that they make this one product for Central Europe, and the side cuts on it make perfect 2x4s for the US. It's almost like the US market ends up being, I don't want to call it downfall, but as a function of other markets that they're cutting stuff for.
Yeah, I think that's true, Mike.
It's a dumping ground. It's a dumping ground.
I think they view the U.S. as an opportunistic market, the same way that you might look at, like, okay, if you can't sell your lumber to your main customers, maybe you start calling some other states, right?
But it doesn't have to be.
But it varies. I mean, there's some of those producers are very committed to the market. They have lots of programs. I mean, the business that's done with big boxes.
Oh, for sure.
So there's a varying degree. But
I mean, if you wanted to create something that was more in line with what the European model is, quarterly pricing, you would just have to pass that through all the way to the end user, and just everybody negotiates a fair price, and then everybody takes their little cut, and everybody agrees on whatever the price is, and they just establish a 90-day window and a certain volume that can't be exceeded or declined. And then it would make it simple.
That's such a good point. My brother works for a developer in Milwaukee, and he refers to the lumber market as the swamp. He absolutely hates it because, they do their business model on their project. Now we're at the mortgage end of the supply chain. They need 12-month pricing as well. And they really don't care what the price is as long as it fits into their model. So what I'm talking about here is just a little food for thought. When you start to get outside to the ends of the supply chain, they have different problems to solve than we have in this middle distribution area.
Well,
And
we
there's
can also
opportunity.
try to figure out how to solve those problems and then be part of it, right? So, I mean, I'm sure that there's some creative people that have done programs. I've got programs. Ashley, I'm sure Greg and Ashley have programs too. I have contracts and I've done VMIs. I've kind of done it all. You know, one thing I've never done is gone to a European sawmill and set up a quarterly pricing program with one of my end use customers. But I think, you know, given the right circumstances, I could probably do that too.
Yeah.
You just would have to get everybody to sit down on a conference call and figure out what the deal is, right? But look, it's just a fair negotiation. I mean, we're all transparent. I mean, we all want to make a little bit of money and figure it out.
Yeah. Well, and we've got a guide. You know, we take a look to the futures market, and that can be our guide. I think that's another thing that's overlooked. We tend to be very myopic and look at the market is what cash is today.
Right.
But there's actually 6 markets out there, and then multiply it across geographies, and you've got exponential markets. But you know, you've got today's, you've got July market, you've got September market, November market, and there's different people that are participating, and there's different supply demand equations for each one of those markets. But there's opportunities everywhere. You just have to open up your kind of vision to take a look at it. Be more global, like Greg. Be more global. We never know. Greg's like Waldo. You never know where he's going to be in the world.
My last interesting comment that I just thought about while we were looking at it, see, Mike, you know, you brought up saying, "Hell yeah, hey, you know, last year for basically for 18 months, I mean, you know, futures carried big premiums, and you know, you were rolling. I mean, you know, it's $50, $60, $70 a thousand. You know, like for forever and ever." And you know what happened was, as we got to expiration at the very end, those spreads came all the way out. So you know, basically the futures market was wrong about what the market was going to do.
Correct.
Looking at the discounts now, is the futures market going to be wrong about what the market's going to do?
Aren't we always wrong? Isn't that what makes the lumber business fun?
Well,
well, no, I'm saying, you know, the futures market wrong about the market, not
but the futures market carries, for whatever reason in our business, everybody is a futures expert, but only 20 guys trade it, right?
Yeah, that's about right too.
So
and 3 of them are on this podcast. Well, 4, right?
Hey, Greg.
So, and I can name another 5 or 6 guys that I know personally that are. So I can get you the information from almost half of the open interest right now. I don't talk to the fun guys.
There's a little more than that if you look at the commitment of traders.
You know, I'm kidding, but the point being that it's a pretty small pool.
There's 100 people when there's thousands making cash decisions every day.
Greg, but then the cash market spends all this time talking about futures, and yet very few people actually participate in it. So it has like an oversized, irrational kind of effect on people's actual behavior. And I go to cash. I mean, when I'm making decisions, it's, I look, can I pick up a premium in the back months? Is there an opportunity for me to buy the front month for delivery that makes sense? I mean, I look at it as a cash transaction based on what I'm doing now and what I want to do 2 months from now, because I have to think 2 months ahead in my business, because it takes that long for me to buy the wood, get it all the way down there, and then truck it to somebody. So I'm always kind of dancing between immediate, what's going on today, and what do I think is going to be going on 2 months from now. But
hey,
a lot of guys don't.
Hey, let's have some fun. And May expires in 2 days, right?
Yeah.
What will the May expiration be? What price will it expire at?
$569.
I'll go the other way, $589.
You want me to go, Ash, or do you want? What do you want me to do?
No, go ahead. Go ahead.
Yeah, I'm gonna take the over on you, Mike. I'm gonna go 590.
All right.
Where's the last right now?
578.
580. I mean, I don't think it's expiring much different to where that. But real quick, Mike, your European strip. What else did you pull out of there? Like what else did you pick up on?
They are amazing sawmillers, and they can make kind of anything you want. I think it's an underutilized resource in the US. The fact that they're so able to custom make a product. I think the fact that their design values are a little different is also it's a problem, but it's not it's not a hurdle you can't get over. So I think it's a shame they make such good looking sticks that we should be able to use it a little more.
Did you guys talk about mass timber over there?
A little bit, but most of the mass timber activity is just staying in Europe for them. I think mass timber is a wild card. When it pops, it's going to pop.
Yeah, I mean, because I feel like it's the thing is it really is driven on the design level, like the engineering, the architects. I mean, that's really where it all gets where it's all driven by, right? It's not, I mean, there's some standardized products, but
yeah, it's a good story.
For us lowly commodity traders, I mean, that's a tough one.
Until people are selling it like a commodity. But I'll say that they're hurting just like everyone else. They high log costs. They're not making money. I want to just comment. Greg, you said something interesting I hadn't thought about. The futures market was wrong. What if they're still wrong? And you take a look at they would be wrong to the upside now, right? So who is short? The Commitment of Traders report tells you the funds are short.
A lot.
That's fast money. So if a short squeeze happened here, like it could get some legs, and it.
How many contracts are they short? 6,000, 5,000,
6,000.
It's down, isn't it?
That seems like a big number.
Have they ever caused a really big short squeeze? The funds?
Oh, yeah.
Never. I mean, they seem to always roll out. Like we always talk about, there's so much in there, and it's going to cause a big rally. And for some reason, they all just orderly roll into the next contract, and it never really rallies.
The reality is the quantity of trades or the open interest is small enough that the industry can absorb it quite easily.
Right. So, I mean, with 10,000 open interest, what is that? 2,500 cars. I mean,
a week's production.
The average daily trading the average daily trading volume in the cash market is, probably, what is that? That's a 275 times 360. Yeah, I mean, the average daily trading volume is probably, 2 or 3 times that.
At
right?
some point, the funds have to give some money back to the industry that's been long losing money for the last 3 years. I mean, you would think, right? All the industry guys that get in these programs where they got to be long every month and roll at a loser. Oof. I don't get that, but they do. Blows me away. Yeah. It blows me away when we hear about them on the phone, is because it's part of their program to be long and lose money every month. But they do.
I mean, if you were long enrolled the last 12 months, you lost in excess of $250 a thousand.
Yep,
that seems like a big number.
Yeah. So this is a great spot. This is a great spot for them. That's for sure. Hey, Mike, always good, man. Looks like you are like, you looks like you're in in Trader Central there with your background.
So the reality is I was an empty nester and had taken over my daughter's room for my office. Now she's home, so I'm dodging bags of clothes and kids and
got kicked into the basement.
Hey, Mike, one of the main things we want to talk about, you're doing a hedging seminar for Southern Yellow Pine.
This is really cool. If you could,
why don't you show that real quick before we?
You gotta allow me to share.
Well, then after you do that, Mike, and before we quit, can you go back to that guy's comment, because I do want to touch on that. We had a public comment here a second ago. Did you see that?
Let's bring.
Well, go ahead, Mike, and then we'll come back to that.
Well, as long as that's up, we can talk about that.
Well, here's one thing that I know for a fact, that our customers are all fighting over margin and market share too. So it seems like the whole industry is just really getting tight on margins, right? So I mean, I just making that observation. I feel bad because the builders are suffering on margin. Yeah, so are the retail guys that are supplying them. They're all beating each other over the head for market share and cutting margins. I don't think that the margins are like super great in the open market for sawmills. Unless you're like one of those guys that's just been long and right all year long. I don't think that the average trading company is, if you're just a back-to-back trading company, I don't think you're making huge margins this year. I mean, there hasn't been that much movement. So yeah, we're suffering, everybody's kind of getting crimped right now.
Yeah, when you think about so during COVID, sawmills made record profits, home builders made record profits, retail pro yards made record profits. We were able to get by and buy new shoes for the kids, so which was nice. But that's we've been dealing with a payback now for what, 3 years?
Yep.
At least.
Yep.
Maybe, I mean, it's been three pretty hard years what we've been dealing with. And so, at some point the pendulum and the dynamics do change on that. Well, hopefully it's sooner rather than later, but I mean,
can you share my screen?
Let's see if we can bring it up here. Yes, sir.
All right. So we partner with StoneX, who's our clearing firm. And we're putting on Southern Yellow Pine Lumber Risk Academy this June in Charlotte. It's a 2-day seminar. We do it at a big hotel. It's a full day and a half of instruction and conversation. But it's a great class. If you want to learn about futures, we start very basic. And by the end, we're talking some pretty sophisticated strategies. But it's an excellent way to get in a room and, listen to other conversations around you and learn from them. And, get some one-on-one time with myself and with Greg Kuda and Alex Mead from StoneX. And I can guarantee you will walk away from this more knowledgeable about futures and probably ready to put some trades on. I know Charles is actually going to be attending this seminar. So you can register. If you can actually, I put something up on LinkedIn on my profile where you can find the link to register, or go to the StoneX or westlinecapital.com, and there's a link there as well.
And Mike, what is it? Everybody stays at the same hotel, and
where's this at again?
Charlotte, North Carolina. I think we're at the Omni in Charlotte. Yeah, I mean, it's a great networking opportunity. We have an excellent dinner on Tuesday night.
Will Two Guns with Two Guns be there?
Two Guns may show up later, much later in the night.
I mean, because everybody should go to an event where Two Guns with Two Guns shows up. I mean, because it's just a real treat.
Mike, how's the volume on Southern Pine? It's like it was the open interest. It was moving up a little bit. It seems to have stalled out, but it's pleasantly growing slowly.
I think, the first wave that's gone in of participants are trying to figure out how it fits into their business model. We need to get a little more EFP or cash business tied to it. I think that's going to make it a lot easier. That's something you're going to learn at the academy, how to actually convert a futures contract into a cash truck.
Because that's really hard.
It is really hard.
So, Mike, at the current volatility levels, are you like pitching options to people right now, or shying them away from it?
As for the options aren't trading in Southern Yellow Pine, but in LBR,
I mean, in spruce, yeah.
I think options are super cheap, in my opinion.
Is there any volume? Can you get anything done?
Yeah. Oh, yeah. You got to, move off of the market.
I mean, if I want to buy calls for September or November, What's it going to cost us?
Oh, but Mike just bought him. That's his gun just went off.
He's front running me. Yeah, he's like, well, hold on a second, I'll get back to you.
That was a bit of a spread trade there. Oops. That's a good question. What would SEP calls cost you today? So at the money, 600 calls. We'll call them 600 calls are, that's priced too high. I would love to sell them at that price. They're probably going to be around $35.
I mean,
let's see what a 30 vol would be.
Yeah,
I bet you could easily pay 35 and get it.
But I mean, I'd rather just outright buy September futures then.
Yeah.
Yeah. You could.
I mean, the trade there is buy September futures and sell those calls at 35.
Or
you could
right,
do
Mike?
that as well. Yeah.
Right, Mike?
But if you do that, then you're just buying a put. So you can buy a put too.
Hey, real quick question here. We never talk about this that much. We always talk about what buyers should do, right, during different segments of the market. What should sellers do? If you're a mill right now and you're looking, and it's May, what should mills do? And you could pick whatever, Southern Pine, U.S., what should they do differently than they're doing currently to go out and navigate the market that we're in right now? What would your recommendation be to some of these people?
So just one, I want to ask one question. So Matt, if I look at US West right now, profitable at the current price levels, marginally profitable, like losing some money. What's
I don't think U.S. West mills are losing money right now. I think they're making some money. I don't think they're making a lot, but I think they're making some money. And it also depends on what kind of log they get and how efficient they are, and
right.
blah blah
but,
blah
but,
blah.
But at the current price levels, their margin. I'm making the assumption that they're somewhere between marginal and maybe some mills are doing better than others depending on what their log costs are, et cetera.
Sure.
U.S. South at the current prices. We don't have Charles on to do is we talk about what gatewood costs and what that conversion is, but they're probably, with their shipping file that they've had over the last 30 to 45 days, making money, but they're probably getting now a little bit closer to where they're more break-even-ish, right? I mean, when we were talking in the fourth quarter and 2x4s were in the mid 300s and 2x6 were sub 300s and everything was down there, we surmised that pretty much everybody was losing some money, and which is why they cut production.
If it was me owning a sawmill in Canada or the West, I would just continue to target 2x6 random, 2x6 studs, because they have the momentum and they have the excitement, right? I mean, and they have a higher price. So you might as well just tap into that for as long as it lasts. And that's going to limit your 2x4 output. If you're a big mill that runs 2x4, 2x6, 2x8, 2x10, 2x12 random, you might get 10% 2x4 out of your log if you're targeting 2x6. You might pull 30% 2x6 or 25% 2x6. Then the rest of it's going to get broken down to 2x8, 2x10, 2x12. Probably going to target 2x10 and 2x12 because 2x12 is pretty high right now. 2x10 has been a good momentum trade to the upswing. All these things are trading above 2x4. And then 2x6 studs, 9s and 10s are far more valuable in 2x6 than they are in 2x4. And there's a lot more people out trying to find them still. So I would do that. And, I would just continue doing what got you here. It doesn't seem like we need to alter course all that much. It seems like the mills out west have kind of already figured this out, and they're doing it. So good for them. If I was a Canadian sawmill, I'd probably be trying to produce more 2x6 if my mill will allow it. Some of those mills up in Canada really are just geared to run heavy 2x4. They were designed that way. And it's hard to take a mill that's designed to run heavy 2x4 and turn into a 2x6 mill. It drops your efficiency down to a point where you lose more money.
I think one strategy a mill could employ would be you pick a floor price. You're not going to go below. And if you hit that price, you load up, reload inventories in areas that you have a lot of liquidity and buy puts. Wait. So
The history of mills doing that. What is it, Ashley? How successful has that been in historically when mills decided to be in distribution?
I love it when they do that.
but that's a trade. But you got to buy the puts. You got to have downside protection against it. So you load up an inventory, buy some
like
puts.
the history of that is it's like, I mean, in the best case, it works out marginal. I mean, you look at historical. Hey, the mill that makes the mills that get the best, mill net return are the ones that sell at the best price the market gives them day in and day out. They focus on having the lowest cost of production and turning finished lumber into cash. And I mean, particularly right now, cash flow is one of the most important things at mills because they're, if you're losing money, you chew up working capital. You need to turn finished lumber into cash as quickly as you possibly can, and we see that every day in the eastern market.
Sure.
And I mean, we continue. I continue to be surprised at how much lumber some of these mills are making. And then I talked to one of my he says, we're currently running at 40%, how much lower do you want us to go? I'm like going, well, I mean,
Yeah.
I don't want to make that call for you. But I understand, that running 40% is, yeah. Mm-hmm.
If I was a mill manager, or if I owned a mill or was an executive at a mill, I would realize that anybody can. Greg, you always said you can always hire anybody to come in and give lumber away every day. That's not that hard. I mean, why do you want to pay somebody to give lumber away, right? You still want to move your lumber the best price you can every day to the person that's willing to pay the most money for it on all your cash transactions. I'm not a big believer in some of the mills that now have 3 tiers of customers, and they call the one tier first and give them a better deal first. Makes no sense. It makes absolutely no sense to me from the standpoint of if they just went back and looked at some of their history, they made their most money. Why do you want to sell somebody cheaper, give somebody an option? How does that create any value or do anything? It sounds like a socialism type of thing to me.
I just think that some mills look at themselves less as sales companies and more as logistics companies. And and that's changed the way they come to market.
I could be wrong. I would do that. First of all, continue to try to build contracts with people to really create a different type of customer if you want to. And thirdly, I'd have my salespeople ask what the firm price is for an extended period of time on certain items from customers just to get the conversation going. Now, you don't have to do anything, but wouldn't you want to have feedback as a mill? Like, my customer will pay me this for 3 months or 6 months. I mean, that creates a whole different dynamic, and you're making yourself more useful and giving better feedback. My advice to some mills is this is what wholesalers and distributors do and how they stay in business and make money. And, the mills see some of the best flow there is from customers out there, and kind of giving away the playbook. That's what they should do. The reason I can say that is I know they're not going to do that. But if I ran a mill, that's what I would do.
There's been some cowboys at the mill level in the past that have done that.
Then you would be Hampton Lumber, right, Matt? Right?
That's
a good point. That's a good point.
But we're an integrated
one
company.
One of the best run organizations in North America. I mean,
well, we have a sales
their
floor.
Strategy.
We have a massive trading floor with lots of experience, so that helps. But really, what makes Hampton unique is the management. And it sounds like I'm brown nosing, but I'm not. I'm just telling you, I've been doing this for a long time.
I tried to tee it up for you, Matt.
I've worked for 3 companies, and I just think that the guys that run this place are some of the smartest dudes and normal guys that you could ever work for. And we had some lady that got hired to do some work in the office here. She was being introduced yesterday, and I said, "Hey, congratulations! You just got a great job with a great company." So I mean,
There
I
you go.
genuinely do feel that way about that. Before we go, I want to say one thing. It's nothing to do with lumber. You'll notice that my name tag says Gonzaga Dad. That's because my daughter Lauren, who's 22, just graduated from Gonzaga on Sunday, and old Beamer here got all blubbery and turned into a jellyfish when he saw his daughter after the graduation. But I just want to say I'm super proud of you, Lauren. The whole family is, and we're glad that you're back home. And she's starting her job. She's going to be working right across the street from the Hampton offices here at the hospital in the trauma unit. She's going to be an ER nurse. So
that's awesome.
Already going to work. Proud papa.
That's awesome, Matt. Congratulations. That's that's one of those great, that great stages in life where, you check that box,
Yep.
Yeah. Got into college, graduated from college, got a job. Check, check, check. Right?
You bet.
That's great. Congratulations, man.
Thank you.
How many more tuitions do you have to pay? Just,
3.
Oh.
She's the first graduate. I've got my other daughter.
Hey, everybody
2 years left.
Be calling Beamer up. Show him some love, man. He got some bills, baby.
Give me the order. I got shoes to buy.
Oh. Hey, W, man, always great to see you. We'll have to get out and play golf sometime this year.
And I'll put Mike. I'll put all your information for your stuff on the summary when I put it out on Spotify and everything. So
fantastic. And just kudos to you guys for number one, being so honest with your opinions. The industry really likes it out there.
Thank you.
Thank you.
I've known that you guys have been pretty widely listened to, but when we got to Europe, and I'm not kidding, every person we talked to says, "Oh yeah, I heard that on the lumber word."
We're gonna have to. We appreciate the support. I mean, we number one podcast in the industry, and we're gonna keep we're gonna keep doing it.
How many podcasts are there in the industry? Oh, that's irrelevant. We don't need to know that.
Hey.
No, there's a couple. There's a couple other out there that are pretty good.
There you go.
All right, everybody.
Hey guys, thank you. Nice to see you, Mike.
Bye.
Good to see you, Matt.
Peace.